Are you interested in buying a home in the Chicagoland area? If so, this video is for you. In it, we will cover everything you need to know about the process. We'll start by discussing loan programs and assistance programs available to Illinois homebuyers. Then we'll move on to the actual buying process, from finding a lender to getting the keys of your new home. So whether you're just starting out or ready to buy now, this video has everything you need. Hi everyone, my name is Ralphie, local real estate agent. If you have any questions during this video, make sure you comment in the description box below. Let's get started. In this homebuyer guide, we will be suggesting a variety of different programs and resources. All of the relevant links you need are provided in the description box below. Now, our primary focus will be the Chicagoland area, but the resources will be available to anyone looking to purchase in the state of Illinois. Now, we suggest watching this video in its entirety as we review important information not covered in other guides. To make navigating this lengthier video more convenient, we have created chapter links so you can quickly access the information that is most relevant to you. You will also find those links in the description. We will go over why you should buy a house, mortgage loan programs, down payment assistance programs, documents you need to get a loan, getting pre-approved, finding a realtor, negotiating the deal, the buying timeline, the underwriting process, and last is the closing table and getting your keys. Now that you know what to expect from this guide, let's get started. In chapter 1, we will discuss advantages of purchasing a home. Now, why should you buy a house? Buying a house is a major investment and can be daunting, but the benefits far outweigh the risk. Home ownership isn't just an important financial decision, it also provides stability and security for families, neighborhoods, and communities. Some advantages of buying a house include fulfilling the American dream. Owning a home is often seen as the epitome of the American dream. It's the symbol of accomplishment, security, and stability for many across the country. Now, you also have great tax benefits. Owning a home also comes with great tax benefits, such as being able to deduct interest payments on your loans and property taxes. You will also be creating wealth. As a homeowner, you will increase your equity with each payment made on your home loan, and this equity can be used to fund repairs and improvements, or even be converted to cash if needed. You would also be hedging against inflation. Since they are not making any more land, real estate is considered a great hedge against inflation. Owning your own home can protect you from rising cost of living and other economic factors. You will also have inflation-induced debt destruction. When inflation rises, the actual cost of debt decreases. And this is a great advantage for homeowners with long-term mortgages because as time goes on, your debt becomes easier to pay as inflation rises. Now that you know some of the advantages of buying a house, let's move on to chapter 2, where we'll discuss loan programs for first-time and repeat home buyers. The loan programs for home buyers. If you're ready to purchase a home, many loan programs are available to help you buy today. Now, across the nation, 5 loan programs are widely used. However, each of them have their own specific criteria and requirements. Before you look for a lender, you should understand these 5 primary loan programs. The first one is an FHA loan. Typically offered for first-time home buyers, these loans are insured by the Federal Housing Administration, FHA, and require a smaller down payment than most conventional loans. With a credit score of 580, you can get a loan with as little as 3.5% down. Next is a VA loan. Offered by the Department of Veteran Affairs, these loans are available to active duty service members and veterans who qualify with credit scores. This program allows you to purchase with 0% down payment. Next is a USDA loan. These loans are offered to buyers in low-income rural areas that meet certain eligibility criteria set by the United States Department of Agriculture. If you're curious to know which areas are eligible for this program, be sure to have a look at their website. I'll post that link in the description. Then you have conventional loans. These loans are not insured by the government and typically require a higher credit score and down payments than other loan types. If you can qualify, this is a great program and the best program to use. You will need a credit score of 620 or higher. And the last one is jumbo loans. These loans are typically used to purchase high-end properties. Jumbo loans often require high credit scores and down payments than standard loans. In 2023, a single-family mortgage with an amount exceeding $726,000 will be viewed as a jumbo loan. Here is a comprehensive chart on how each of these programs compares. Let's discuss purchase assistance programs and loan programs available to Illinois homebuyers. Now, the first one is the IDA loans. The Illinois Housing Development Authority provides multiple loan programs for first-time homebuyers in the state of Illinois. These programs are designed to make it easier for buyers to purchase a home with low down payment options and other incentives. IDA offers 3 different programs: a forgivable, a deferred, and a repayable down payment assistance programs. These programs provide anywhere from $6,000 to $10,000 in assistance. To qualify for these programs, you must have a credit score of 640 or higher and not have a household income over $111,000 for most counties. If you would like to learn more, you can check out their website or watch our most recent video all about the 2023 down payment assistance programs, and we'll link it above too. The second is the city loan programs. Many cities in Illinois also offer their loan programs for first-time homebuyers. These loans can offer help with down payment, closing costs, as well as other incentives. To qualify, you must meet certain criteria set by the city and meet their income requirements. Now, it's important to research these loans before applying because each individual city varies on conditions and terms. Numerous towns including Chicago, Aurora, Joliet, and Romeoville have first-time loan programs. These programs are usually in high demand and fill up quickly, so you must look into them right away if you're interested. Make sure to act promptly. The third one is lender programs. There are 2 national lenders that are very popular with homebuyers. The first one is the Chenoa. Chenoa is a great option for those looking to purchase a home with limited resources. It offers 2 down payment assistance options, one a repayable and another forgivable, which can be assessed by borrowers with credit scores as low as 600. The program also doesn't have an income limit, but the home price limit must be below the FHA loan limit for your area. Chenoa makes it easier to purchase a home with their down payment assistance of either 3.5% or 5%, offering more flexibilities for those looking to buy. The second is NACA. NACA is the Neighborhood Assistance Corporation of America, and this is a program that offers 100% financing. Although NACA process may be lengthy, for those who are dealing with low income issues, this is definitely worth considering. Despite its time-consuming nature, you can be rest assured that this extra effort will pay off in the long run. I will link both of these programs in the description box below. And the last one is banks and local banks. In addition, many large banks like Bank of America offer down payment assistance programs for those who qualify. The qualification requirements vary from bank to bank, but generally include income limits, debt-to-income ratios, credit scores, and loan limits. You will need to speak with a bank representative to give more information about their specific programs and requirements. Let's explore interest rates. The most common question I hear from most buyers is, what interest rate should I expect? Rates are consistently changing. However, the Consumer Finance Protection Division gives you an estimated calculation of what you can expect in your state based on your credit score, home price, and loan type. I will leave that link in the description box below. Once you have figured out what program you might be interested in, you want to contact a lender familiar with the program you are considering. You want to ensure the lender is approved to provide the loan program you are inquiring about. The lender can provide more information and guide you through the process. Now, I suggest not searching for the best rates. It's much more important to seek out a lender that you feel comfortable with. This person will guide you through one of the largest purchases of your life, so it's important to make sure that they understand your needs and that you feel comfortable with their advice. You want your lender to have a heart of a teacher and always be available to answer any of your questions. Remember, your lender is a key piece to the puzzle, and they can make or break any deal. So make sure you choose wisely and find the right lender for you. Let's talk about finding a loan officer. Now, you can find a loan officer by the loan website that you're considering. You can talk to friends and family. If you have a referral network, you can talk to them. If you're already talking to a realtor, you can have your realtor recommend, or you can also look online for Google reviews to see which one suits you best. Next, let's talk about documents needed to get a loan. I have gone through the loan process myself multiple times, and by far the most hassle is the paperwork. You need to provide a lot of documents to get approved. Some of the documents you will need include the following: a pay stub from the last 30 days, 2 years tax returns, bank statements for the last 2 months, driver's license or a photo ID. As soon as you have these documents in hand, your lender will get to work with these documents and start the pre-approval process. Your lender will begin the pre-approval process, which will take anywhere from 5 to 10 business days, depending on your lender. Now, during this time, your lender will verify all of your information and determine if you are a good fit for the loan program you have chosen. Once you get a pre-approval, the fun really begins. Your pre-approval will give you an idea of what loan program you may qualify for, your max purchase price, your estimated interest rate, and an estimated monthly mortgage, often referred to as the PITI payment. Now, being pre-approved gives you great advantage before looking at homes. It's very important. It will give you an advantage over potential buyers, and both sellers and realtors will take you a lot more seriously. Next, let's talk about finding a realtor. Your realtor is the key to the success during your home buying journey. They will help you find the right home in the right location and within your budget. Your realtor will help guide you through the entire process as well as negotiate on your behalf. Now, finding a good realtor takes time, so make sure you ask around for referrals and interview them for the job. I get always asked, where should I find a realtor? Well, you can talk to friends and family, you can talk to referral partners, maybe find a local expert if you see somebody that's doing a lot of business in a certain area. You can also go on Google reviews and see if there's any great Google reviews for somebody local. You could also ask your lender for a recommendation. Remember to choose a teacher and not a salesman. If you're in the Chicagoland area and would like assistance finding a realtor near you, or would like to use our services to help you through the process, please contact us. All of our information will be in the description box below. You can also check out this video titled 3 Tips to Find the Right Realtor. Once you have found a realtor, let them know that you're pre-approved so they can show you homes that are in your budget. Now, some of the questions that you should be asking your realtor include, how long have you been an agent? Are you full-time or part-time? How many clients are you currently working with? Do you have a team or do you prefer to work independently? What is the market like in the neighborhood that I'm looking for? And what is your specialty? I get always asked also, how much do they cost? A question often asked by home buyers is the cost of using a realtor. And it's typically free for home buyers that are working with a realtor because the seller pays the commission, typically 2 to 3% of the sale price. And the commission is split between the selling agent and the buyer's agent. So don't be afraid to ask questions and make sure you're finding the right realtor for you. Now, the agent won't get paid unless he or she does the job and gets you into the right home. Next, we'll talk about working with a real estate agent. The relationship between you and your realtor is very, very important. You shouldn't be looking at a lot of homes. Instead, you and your realtor should be zeroed in on precisely what you're looking for and find the best fit. Let them know your must-haves, your deal breakers, and then move quickly when you see a great opportunity. Once you find a home that you like, your realtor will help you from start to finish every step of the way. Your realtor's job is to negotiate on your behalf and get the best deal possible. Having an experienced agent on your side makes all the difference in a successful home buying experience, especially in a very competitive market like what we are experiencing today. Next, let's talk about negotiating the deal and your team of pros. Your team of professionals, including your lender, your attorney, your home inspector, and your realtor, will be what you'll be relying on, and they will help you get you the best deal possible. Make sure you have an open line of communication with your realtor and your lender so they can keep you informed on what exactly is going on at all times. And your realtor will also be able to provide their expertise when it comes to coming up with a great offer. Negotiating the deal comes down to using all of your resources and your team members. Next, let's talk about earnest money. Earnest money is a good faith deposit you make when submitting an offer to show you are serious about buying in the home. And it varies between typically 1 to 2% of the purchase price. In most cases, your earnest money will be credited back to you at closing, or in some cases, it can be forfeited if you don't meet the terms of your contract. So it's important to note that the earnest money you deposit is generally held in an escrow account with a title company or an attorney. The contingency is a condition of your offer that must be met before the contract can become binding. Common contingencies are home inspections, loan approvals, and insurance requirements. Next, let's talk about terms. To submit an offer, you must include a pre-approval and a contract. The terms including your contingencies Your closing date, your earnest amount, and your loan type all factor in when submitting an offer. To be competitive in a tight market, understanding the market and getting the best terms to make the deal work is vital. Rely on your pros here as well and learn the general terms of the real estate contract. And if you're looking and are interested in going through a standard real estate contract, I will link that in the description box below. Next, let's talk about price versus value. Price is the amount that you are offering for a home. Value is what the home is worth to you, and it takes into account condition, location, neighborhood, comparables, and active inventory. Your realtor can also help you figure out if the asking price is reasonable and if it is fair market value. Price and value are different. Your realtor can be the best resource for helping you determine this. When making an offer, price should not be the only thing you should consider. Make sure you look at the whole picture and consider factors when submitting an offer. Once your offer is accepted, the process isn't done yet. You will need to go through the inspection period, the appraisal of the property, and get your loan approved. And this process is typically 30 to 45 days, but it can vary depending on the lender and the market. Your realtor will be able to provide more information about your timeline in your specific area. Here is a basic breakdown of the timeline. First is the 5-day attorney review. After you have an accepted offer, your realtor will submit a fully executed contract to the attorney. You will have 5 days to review the contract with the attorney and make any changes that are needed except for the purchase price. Then you have a 5-day inspection period. The inspection period typically is 5 days long. Now during this time, you should have the property inspected and see if there's any possible issues. If there are problems during this time, you may be able to ask for repairs or reduce the price from the seller. Now within 3 to 5 days of the purchase agreement, you must also deliver earnest money to the attorney, the title company, or the seller's brokerage. Next, you will have 45 days to secure financing, or 5 days before the closing date, whichever comes first. If you're unable to secure financing, the contract will be null and void. Closing will take anywhere from 30 to 45 days. Now during this time, your lender would be able to work with you on securing financing, and the title company will be preparing all of the documents needed for closing. Next, let's talk about working with inspectors and real estate attorneys. Once you have an accepted offer, it's time to start finding inspectors and a real estate attorney. Your realtor can recommend good people to work with. Typically, inspectors charge anywhere from $300 to $500 for a home inspection, depending on the size of the home. You will want to schedule 2 inspections. One is a structural mechanical inspection, and the other is a radon gas test. Your real estate attorney will help you with the paperwork and ensure everything is going smoothly during the process. They can also help advise you on any legal matters and questions you may have about your purchase. It's important to have everyone in the process be able to communicate and work together. Once you are past the 5-day due diligence period and attorney review, you will then move on to the underwriting process. Underwriting is a process that banks and lenders use to evaluate the risk of making a loan. Your lender will review your credit history, income, assets, and other financial information. And this process can take anywhere from 20 to 30 days before you receive approval or denial from the bank. Your lender will be monitoring the process and will keep you up to date as to what's going on. This way, there are no surprises when it comes time to closing. Now, if you have an FHA loan, you will need a separate FHA loan inspection at this time, and this process can take anywhere from 30 to 45 depending. Your lender will also order a home appraisal before closing, and this process takes anywhere from 5 to 7 days to complete, and the results will determine if the loan is approved or denied. Often I am asked what happens if the home doesn't appraise for the agreed price. If the appraised value comes in below purchase price, you can either try to renegotiate with the seller or put more money down to make up the difference. This is why it's important to do your research when offering a price and ensure you are not overpaying for a home. Often, in most cases, the difference is split between the two parties, but if the seller is not willing to lower their price, you may need to consider other options. Now let's go over all of your total out-of-pocket expenses. First is your earnest money deposit, which is 1 to 2% of the home price. A home inspection, $300 to $50 to $500. An appraisal would be $500 to $700. Attorney fees would be $600 to $700. Your down payment would vary depending on your loan, 0, 3.5, 3 or 5, or up to 20 if you wanted. Your home insurance would have to be paid up front, and that could vary depending on the home, anywhere from $1,000 to $2,000. And of course your closing costs, which would vary, but it's anywhere from 2 to 3% of the home price. Now, a rule of thumb is to have around 6% of the purchase price saved up just to cover all of your out-of-pocket expenses, and it's essential to have a realistic budget when considering purchasing a home. Next, let's talk about the closing table. Now, after all the work and time you have spent looking for a house, it's finally time to go to the closing table and get your keys. This is when you sign all of your paperwork, pay your fees, and officially become a homeowner. At this point in the process, money is typically due at closing, and closing costs can range anywhere from 1 to 2% of the purchase price, but can be much more depending on the loan program you are using. So you will need to have enough cash saved up or a large enough line of credit to cover these expenses. At the closing table, you will have to sign some important paperwork. Let's go through those individually to learn more in detail. Now, what is title insurance? Title insurance is a policy that is given to you that covers your interest in the property, and it protects you from any past claims or liens on the title of the house and makes sure that you have clear ownership. Now, this cost can range anywhere from $300 to $1,500 or higher depending on the purchase price. Next is a mortgage. Now, a mortgage is a loan taken out to pay for the purchase of the home, and the terms of the loan are usually based on your credit score, your income, your debt to income ratio, and the average mortgage can range anywhere from 15 to 30 years and is a lien against the property in case you don't pay your mortgage. Finally is understanding a deed, and a deed is a legal document that transfers ownership of the house from one person to another, and it will list all of the parties involved in the transaction as well as any liens or encumbrances on the property. And it's important to make sure that all of the information is correct before you sign off on that. Here are my final thoughts. Buying a house is a big commitment and can be overwhelming at times, and it's important you take your time, do all your research, and make sure you understand every step of the process. Ask lots of questions and be proactive so that you can make an informed decision when making such a necessary purchase. You have made it to the end of this video, so congratulations. You are much more prepared to purchase a home than most every other home buyer out there. Now, we hope this video was of some value, and we hope that you better understand the home buying process. If you would like a one-on-one consultation discussing your specific situation, feel free to reach out. All of our information is in the description box below. Thank you so much for watching. Consider subscribing, and I'll see you guys next time.